Okay, I want to take the time to explain a bit more thoroughly how I'm using the relative volume, volume analysis in general, including the volume profile, and the trend channels. So I've taken two trades today, a long here with a very poor exit, and then a re-entry short with not a very nice entry, but nonetheless a good area from which to enter short to hold until we break this low here. Okay, so I'm holding this as we're coming lower. But just to go over this long first, let me set up why I took this long and kind of what's happening in the crude oil market right now by looking at the higher time frames. So let's first look at the higher time frames. If you have a hard time keeping up with it, just don't worry about that. We'll come back and show you exactly how I'm entering here based off just the 5-minute and the 1-minute. But first, we really need to kind of understand where crude oil is trading relative to the prior days using the higher time frame. So let's do that first. So this is the 240-minute chart, the 4-hour chart, and you can see we've put in a triangle right here. And anytime you see, well, not anytime, but most of the time, when you see a triangle after an extended move, this is not a basing pattern. It's just a period of indecision, which most often will move out the way that it came in. So if we're coming down into a triangle, it will move out to the downside. So after seeing this, it was obvious the beautiful short right here, and then right here, and right here. Okay, now we're going to start looking right here where we had this massive climax bar in the relative volume, which also pulled back to the underside of this downtrend channel, which we have from low to the lowest close here after this massive climax. And that's where price has not been able to get through. So we have price coming back and hitting the underside of that line right here, and right here, the 3 points, the 3 swing highs of the triangle. And then it finally even pulled back a second time, well, a fourth time right here. Okay, and then it finally broke below this trend line right here and then pulled back to this downtrend channel. So from lowest close here to the low and then up to the swing high here, we pulled back to that right where both of these lines meet here the first time, and then we pulled back to this black downtrend line, trend channel line, right here on a low volume up bar, as you can see right there, indicating no demand on that bar. And then the next bar down was a massive climax bar, and it's been kind of going sideways to down until last night when the market reopened after New Year's Day. It opened and then immediately spiked into this climax into this previous low right here. We have a bottom, we have a low here, and a low here. And that's right where it pulled back to also this downtrend channel line once more. Okay, so this was a perfect area from which to get short. The only problem for getting short there was the massive amount of risk. If we look at, let's look at just the 5-minute chart there. This is last night. You can see it spiked straight up, it hit that spot, and then came immediately back down. This is a 44 tick wick. That's pretty huge. So I was waiting for it to come back and test this area again. It didn't do that, so I didn't take a short because it's too risky, too much risk on the table right there. So I missed that. But then what has happened is we traced out a perfect trend channel here, putting in the low at the bottom of the channel right here. So from high to high, back to this swing low right at the open last night. Remember, it had been closed all of the day, January 1st, and it reopened at 6 p.m. Eastern. It found support at the bottom of this trend channel right here, pre-market, and then when it opened, it started moving up, okay, and then it pulled back to a higher low. So we have one higher low here, and then another higher low right here. And I want to show you this. This is where I bought, carrying up into this long trade and then shorted up in here. So we're going to cover that in a moment. But first, let's look at this area right here. Okay, so you can see from this chart, I have the volume profile, which is available on Big Mike Trading Forum as a free download for elite members. And I have it set to the Ninja tick file, tick data, so that I don't have to record any of the data, any of the volume data. It can just access the tick file. Aside from going into details about how to use the volume profile and how it's built and all of that, let's look at this spot right here. This high, this swing high. So when the market opened last night, it opened right here. And if there's any one area that you think the market would come to a dead stop at, where do you think that area would be? It would be the edge of this massive volume distribution here. So we have one edge right up here at the top, and then the other edge at the bottom. So if we were to break through this bottom edge and immediately start going up into this profile, we could expect it to most likely get to the other end of this profile. But here, it spiked straight up into a climax right into the lower portion of this volume distribution. And as I add more bars to the chart, you'll see it makes a larger profile. But this is right where there are, I'm sure, a ton of people that are still long, people that have bought within this volume distribution, that are holding, even though, I mean, you can see that this is an area where you've got this triangle where you have a change of hands of a lot of contracts. You have a lot of people unloading their shorts, and then people selling short, people building long positions thinking that this is an accumulation when it's actually a distribution phase, again, to make another move lower. And all those people that are caught long are really ready to get out of their losing short position, because if they didn't have a stop, or they're large traders that are building a large position, once it gets back up into that area, they're willing and ready to get rid of that losing position. So you'll see as we get up into that area that people will have orders already sitting there to get out if the market comes back to that spot. And you'll see just from the 5-minute chart that you have a massive influx of volume here. You have just a huge amount of volume, 2,000% of what's normally traded on that bar, even very high relative density, which is 217%. So when we hit into this area, we blow off, climax right into this high, and then never make it a tick higher. So I was thinking, well, maybe we'll come back and we'll test this spot. I'll be able to get short, but it doesn't actually come back and test that zone. So the massive amount of risk that we have, something like 44 ticks, is just too much for me to put on a position down in here when I'm kind of thinking it would come back and test this wick, this zone here. But it didn't, so I wasn't able to get short here. Long story short. Now, what happened after that is it turned down and it never looked back. Came down and hit the distribution here, but it came right through it. We actually came down to make new lows. So we had this massive move down last night and this morning of $3, 300 ticks straight down. So here, when we put in this low, what we've done is we've overshot the bottom of this trend line right here. We've just barely overshot the bottom. That's a throw under. If it were at a top, it would be a throw over. So you see you've got this kind of a expanding triangle right here. This is a contracting triangle back here. And now we have what kind of looks like an expanding triangle. So when it comes down and it makes that low right there, I'm thinking, well, this is probably a pretty good low. So most likely we'll get a move back up into this distribution right here. So I'm thinking, well, we will likely get back to this area, this VPOC, and then come down and make new lows if we can break this low. So I'll have to see what it looks like when it gets down there. But when we get a higher low here, and then a potential higher low right here. That's where I'm looking to get long. So if you can see these bars right here, you see this VPOC? Right there. We pulled right back down to it. And I want to show you that area now on the 5 minute. So if you had a hard time keeping track, following along with this higher time frame analysis, let's just look at 2 time frames now. We'll look at the 5 minute and the 1 minute chart. So this is that area where I went long. Now what I have here, I'm not going to, let's just forget about going into the details of the volume profile. Let's look at just a simpler volume profile that has all of the bars on the screen incorporated into the profile. So as I add more bars, the profile becomes larger and larger. You see that? So we're just going to add this many bars, and we'll go back to the area right here where I got long. So let's erase all of the drawing tools, and then I'll add them one by one until you can see this clearly as to why I went long right here. Do you see this little distribution right here? So if I were to blow this up to right here, you can see the volume profile, the VPOC, the little distribution that we have today. The main distribution was right here. So if we can pull back into this area, possibly making a third, well, I'm sorry, it would be the second higher low, then that's the area where I want to try to get long, based on some other things, which I'll show you in a moment. So there's where we come back and touch the VPOC, right there. So that's where I'm thinking about getting long now. You can see the increase in volume. We have that marked by this little dot, which is showing a high relative volume bar coming in right there. All right, but first, let's do all the proper analysis that we have to do in order to line up the probabilities. All right, so what would you do first? Well, you've got a beautiful high here, and then a beautiful swing high right here. You would connect the trend channel, and then bring it down to the swing low right here. You see? And it gives you this swing low perfectly, where we've had a massive amount of relative volume come in. So that's a confirmed swing low, most likely, that will have a bounce back off of this line, probably back to the top of the channel. So that's what I want to see. I want to see the market move up off of this channel, come back, make a swing high, higher low, maybe possibly a lower low, making another swing low here. But it made the higher swing low, and then it turns back up, and then we're coming back down. I want to see a second higher low there. All right, so what else am I doing? How else would I confirm this low? So imagine we're right here now. What else would I want to do? Well, I would want to run the fibs. So I would run from swing high to swing low to swing high. What do we have there? 100% exactly. It's 100% extension to the tick. Very high relative volume, confirming the low. High relative density, showing us that there are a lot of contracts coming in to buy. It's closing off of the low. We have demand coming in right there. How else can I confirm that? Do a fib confluence zone. Low to high. Set it up for the retracement, the expansions, I mean, right here. There's 300%, so 2 times this swing. You see that? So from low to high is 100%. Add 100% to the bottom, 200. Another 100%, 300. So that's a fib confluence zone there. Let's take it, run it back to this one. What do we have there? We have a 161.8 expansion. So we have 3 of the lines coming together right there for that swing low. So we have a fib confluence zone right there. What else do we have? Well, if I tighten this up even more and draw another trend channel, let's say from this swing high right here to this swing high, and then down to the swing from which we've had all of this demand come in, this swing right here, where we've had this big run up now. It's the last place we had demand come in. This is likely going to be the area which demand will come in again. So we have a cross section there now. You see that? Where we have two trend channels coming together, right at a fib confluence zone, demand is coming in, confirming this low. Does that make sense? This is what I love to see. This is telling me, okay, the market is ready to put in a low here, and we're likely going to go back up to correct some of this move. All right, we've broken this low. We have a huge rush of volume. All of the people that don't know what they're doing are going short, and the guys that are making money are building a long position right here, or at least getting out of their shorts, but likely building a long position as well. All right. So all of that aside, what do we do now? Well, from this point, I want to connect low to low to find the next swing high. Low to low to find the next swing high. I bring it up to this high. I want to see the market get back to this trend channel. So we come out. There's our high or low right there. Closing near the high, kind of a hammer looking bar. Boom, we hit the top of that channel. Now we're either going to come off of this and come lower, or we're going to break up out of this trend channel and then pull back to it. If we're going to break out and pull back to it, I want to get in where it pulls back to it. Boom, it breaks out right there. Now I want to see it pull back down to the top of this trend channel line, and it does that right there. On this bar, I'm tempted to go long. If I want to wait and see a little bit of confirmation, I'll do that, which is what I did. Okay, then it kind of goes sideways. We're right in this distribution right here, right around the VPOC, the volume point of control. And right here on this bar, we've pulled back. This is what's called the kiss goodbye, just a technical name for breaking out of a trend channel, pulling back to it. That's the kiss goodbye. And we've gone sideways a little bit as we're accumulating in this area. And then we have one high or low, second high or low, and then I buy. Alright, so let's look at the 1 minute chart of that area. Okay, so here's the area right here. This is where it broke out right here, and then pulled back to it. Let me draw that in. So we have the low here, to the low here, up to the high. Hang on a minute. Here's the low right here. Okay, there we break out and we pull back to it. Where does it pull back to? Also the low of yesterday's low. So that's perfect right there. Now this is what I was waiting for. I should have bought on that bar, but I wasn't prepared. Do you see that? This churn bar right here? Also a very high relative volume bar as marked by the triangle. So it pulls up off of the downtrend channel, pulls back to it with an increase of demand, increase in relative volume. It closes up near the high, and then it turns back up, pulls back again, makes its second higher low, one higher low, two higher lows, and then boom, we break up out of this little area, and I buy long right there. I buy one with a stop right behind this low. So a very small stop, 10 ticks. And then we continue to move up. Now once it starts moving up, what am I doing? I'm looking for a place to exit. So where is that exit most likely going to occur? Well, let's look at the 5 minute chart. So at this point, what are we doing? We're drawing in all of our trend channels and fibs. Let me just add the retracement here to show you that this was also the 61.8. You see? So it also pulled right back to the 61.8. I mean, you couldn't ask for a more beautiful setup than that. That's about as pretty as it gets. So now we're drawing in the pitchfork from low to high to low, drawing in the trend channel, low to low to high, and then our extension and an expansion. and we start scrolling forward. So right here it pulls back to, so if you missed it, if you didn't get this, it pulled right back to the lower median line right there, and that's where a lot of guys that trade with the pitchfork, with the Andrews median line, that's where they'll get in right there when you put in a new pitchfork and then it pulls back to the lower median line or the upper median line, they'll get long or short right there. And it starts to go up, breaks through this next downtrend channel. Then we get a churn bar. That was my first area to exit from. We pulled right back to the top of the trend channel here. All right, but I wasn't paying attention as I should have been, and waited a little bit longer. Pulls back to the median line here, and then goes back up. We get a second churn bar, so we get two churn bars right there. All right, that was the even better exit at the top of the channel, but I still didn't get out right there. I was holding a little bit longer, and then when I see the reversal, I go ahead and get out right there. Okay, then it pulls back up, and it turns right here on increased relative density. So I said, okay, well, I'll go ahead and get short one, and if it pulls back to the top of the channel again, I'll short another one, because we haven't broken above this high yet, and we're pulling into this volume distribution here. So we're getting a lot of selling going on right in here, and you can see where we have low volume node right here with another smaller little distribution right here. So if we can pull back to that lower node right there and maybe a little bit into this distribution, then I'll sell another one, which I went ahead and did as we hit that spot right there. You see? And then there was a lot of volume that traded right there. You can see it. You see the new smaller distribution where the volume came in right there on that bar. So a lot of volume came in near the top of that bar, as you can see when I back up one bar. You see? So watch this little area get filled in until we have a new little node right there. You see that? So a lot of volume came in right at the top right there, right at that high, and I shorted as it started to pull down. And then I'm holding short ever since. Okay, does that kind of help explain a little bit further how I'm doing this? This is just an incredibly accurate way of picking the major turning points during the day. And then to look at this on the 1 minute chart. So here we pull to the top of the channel. It's also yesterday's high. So we go from yesterday's low to yesterday's high. We make the full range, low to high. And then what is that last bar? This massive 375% relative volume climax churn bar right into yesterday's high, breaking above it slightly, and putting in this kind of a 1, 2, 3 swings to a high, 3 pushes to a high, and then reversing. So I'm shorting here, shorting on that bar, and then waiting for this thing to move down as it's done now, and we're going even lower as I speak. So that should maybe explain a little bit further how I'm using all of these things together. Hopefully I'll be able to put together a room where I can teach this stuff more thoroughly on a day-by-day basis so that you guys can actually learn how to do this as I'm doing it. Alright, so thanks for watching. Hope this helps.